Hi, Frank Ahrens, economics blogger with the Washington Post. Today, we're going to talk about inflation and this slack in the system that you hear people talking about all the time. On Thursday, the government released its inflation figures for February, and it showed that inflation in the U.S. is a modest 2.1% compared to February of last year. Now, that's almost not noticeable. People who lived through the big recession at the end of the 70s and early 80s remember inflation rates of 14 to 15% year over year. Now, inflation simply means higher prices. It means your dollar goes not as far as it typically would. Now, why is inflation so low? Well, the federal government says that it's low and it will stay low for a while because there's what they call slack in the system. Now, what does that mean? Okay, imagine this is our economy. On this side, this is stuff that, this is you. This is people buying things. This is people buying refrigerators. This is auto dealers buying cars from manufacturers. On this side, you've got the people who make things that are bought on the other side. You've got automakers making cars. You've got housing, real estate companies making houses. And in a healthy economy, you've got this nice relationship between the two. There's no slack in the system. Companies are making things, people are buying it. It's pulled from the demand side and it's pushed from the supply side. Now, in the Great Recession that we just came through, we got this, and this is the slack. If you've got unemployment that is near 10%, which it is now, people don't have money to buy things. And if people don't have money to buy things, manufacturers are not making things. And here's a statistic you can take home. In healthy times, U.S. factories run at about 80% of their capacity. Now they're down to less than 70% of their capacity. And those of you who've lost a manufacturing job in the past year or so know that all too well. Now, what we're looking for is for unemployment to come down, people to start spending again, and then this slack to go to a nice dynamic tension, which is what you want to have, hums along in this direction. Now, when will that happen? That's the big question. The federal government is betting and hoping that inflation will stay low as long as unemployment stays high. They're hoping that unemployment will start to come down before inflation goes up, because if you've got a toxic mix of rising inflation and high unemployment, then you've got real economic problems and potentially a double-dip recession. I'm Frank Ahrens, economics blogger with the Washington Post. Make sure you read my blog, Economy Watch.